Welcome to my trading room, and I'll be taking you through. I'll be taking you through module 7, where I'll be talking about some theoretical aspects of FX. I'll be talking about mastering candlestick, risk management, and identifying zones and market reversals. So that's what I'll be talking for today, and I hope this will be very, very insightful. Very, very insightful. So first, mastering candlestick like a pro. There are some people that they don't really need to make much analysis. Do just to look at what the candlesticks are saying, and they are gonna make their trading decisions. But it's not as if you just jump and conclude. But first of all, you must know your key zones. So after identifying your key zones, drawing your liquidity or whatever you want to draw. After identifying your key zones, the next thing is to go straight to where price is and watch out for what the candlestick is doing. Most times, this kind of method is mostly used by day traders and scalpers. Mostly scalpers then trade sometimes, but I think most times it's always the scalpers. Understand? So mastering candlestick like a pro, it entails that you need to be able to understand some key things about candlesticks. So I'll give you one of those tips now. So now, assuming that I have a candlestick here, and let me select a color. I have a bearish, a bullish candlestick, and I have a, and I also have a bearish candlestick, I have a bullish candlestick. Now, there's something I know about this. Once this bearish candlestick, once the bullish candlestick engulfs at least 50% of the previous candlestick body, you should be waiting for a reversal because it's also more likely to happen. And there are some cases that it is going to pull off, it's going to pull, the price will pull to this extent, and there are sometimes that the price will pull up to this extent, and after pulling up to this extent it reduces down. Now what is important is that you're always looking at where the candlestick will close at. If there was if the preceding candlestick is not the same as the latest candlestick, you have to look at where price will close at. So if price closes above the 50% level, or price reaches the close, the open of the last candle or close, depending on the kind of candlestick. So if price pulls up to this, if price pulls up to the open of the bearish candle and probably goes down, understand, and probably close above the 50% level of the bearish candlestick, I'm going to be looking at a reversal pattern. So this is what you always be looking at if you're trading. So even if it's in the 1 minute time frame, 5 minutes time frame, or 15 minutes time frame, if you see this kind of a setup for a reversal, understand. And there are scenarios that something like this can happen. Something like this can happen. Then we'll see a long. What is wrong? Why can't I draw the way I feel like? Okay, let me see if I can use this too. Okay, I was trying to see if I'll be able to use, but it's not working. If we see a long candlestick here, then we see close, and maybe this is a bullish close. This is a bullish close, a bullish close. You say bullish close in these aspects. Yes, I can always I can always anticipate that there will be a reversal. Understand? I'll always look up for a reversal in this kind of setup. And there are times that things like this occur. Something like this. We have it here and we have it here. This is a bearish candlestick also. If price pulls up to the open of the last bearish candle and drop down and close and forms a bearish candle and closes this way, it means that the bearish trend is very, very strong and you should always be looking for a sell position. So I've given you three candles or three scenarios to read a candlestick like a pro. The 50%, the pull pull up, pull back, close the bearish way, and you can also apply this method vice versa. It's not just for the bearish candlestick. You can apply it for the bullish candlestick as well. So we have the next one, risk management. Now, my concept about risk management is that if I'm entering a position, probably I want to pick a position from, okay, let me use something that happened previously. I want to pick a position from here. I want to pick a position from here. And my account, now I want to pick a position from here. That's what this is what I'll use now. So I want to pick a position from here. I'll pick a position. So I have something like this. I have what I saw there now is what I'll draw out. So I'm picking a position from here. So I have 6,000. I have 6,000. Let me see, I have $100. I have $100. And what do I want to risk? And the normal position I do use is call it, I do use 0.05. That's what I use. But now entering this trade from here, probably I was not patient enough to wait till, probably I was somewhere here. Probably I was somewhere here. Probably I was somewhere here. I wasn't patient enough to wait till price pulls back here. Or price pulled back here, but and it was tracing, it was going on a very long distribution mode, and I didn't enter early. So if I'm entering from this place now, I discover that my stop loss, if I'm using 0.05, probably my stop loss will be around, probably, let me say $60, which is high, which is much. So my stop loss will be $60 because my stop loss will be somewhere here. Understand? So it will be $60. I don't want to lose $60, understand? Because I must first think of the loss. I know that everyone will say, no, I'm an expert, I'm an expert. No. So this is what I will do. Very simple. You don't just stress yourself. I really want to enter this position. Don't forget, I really want to enter this position. So what I'll do is simple. I really want to enter this position. So what I'll do is simple. I'll reduce the I'll reduce it to 0.02 or thereabout. So if the actual amount of dollars I want to lose is always $20, so I'll reduce my lot size till it tallies with the $20 if I really want to get into this position. That is the only risk management tip I'll give you for this course. So now, identifying zones. Now, in previously where two or three supports and resistance meet is a zone, is a very key zone. Now, for a zone, so identifying zone, the first thing you put in place is, let me see how many tips I can give you for here. So the first tips you put in place that you're definitely looking for where two or more support meet. Now, If the more the support or the resistance, you understand, the stronger the zone. So the first thing you're always going to be looking at, you're going to be looking out for the strongest zone in what you're doing. So after identifying the strongest zone, you can now move on to make your analysis based on any strategy you're using. You understand? So the first thing is that two or more supports meets. That is the next thing. Then the next thing is that you find you use the higher time frames, use the HTF to find your zone. Because if you use smaller time frame, you get confused. You understand? So first of all, you draw your zones on the higher time frames, and after drawing, if you're using a very large screen, you understand, you can go back to the 5 minute time frame and zoom it in the way that you can see the picture of at least the last 7 to 5 days. Understand? That's from the hour time frame or the minute time frame. That's what you do. So the large number of data you can use to, like, the larger the number of data you use to make your analysis, the more accurate your analysis. I don't mean that you should make analysis based on um previous days and you will now start making trades. This is what I mean. Now I'm reducing my laptop screen and I want to make decision based on what I've seen here. So I have this is the daily chart. Let me reduce it. This is the daily chart. Now in this daily chart now there are key zones I will draw out. Now the key zones that I'm drawing out on the daily chart are very strong zones. On the daily are very strong zones. Because now if I just want to see few days um the trades that happen in few days, I won't see other key zone. So the purpose of me seeing more data is that I want to be able to understand and I want to be able to draw out more key zones than what I saw in the previous days. Understand? We are working with zones. There are zones that have not been tested in the last 30 days. There are zones that have not been tested in the last 14 days. So those are zones that will always be the next target. Understand? So if you draw it out in the 4 hours time frame or 1 hour time frame, depending on what you do, you'll be able to see a lot. You'll be able to see a whole lot. You'll be able to see a whole lot. So that's just it. So what else do we have? So what else do we have now? Mm. So I've given you a few tips for drawing zones. Now, when you draw a zone on a higher time frame, it doesn't mean that price will go immediately, especially if you're drawing a zone on the weekly. You don't make a mistake of entering a trade based on what you see on the higher time frame. If you do that, you might make some mistakes. You have to break down and go to the lower time frame and see what price is doing for you to make your trade entries. So you make your analysis with the higher time frame and you make entries with the lower time frame. You understand? Your higher time frame and your lower time frame must correspond. There is how your higher time frame might be saying bearish. Self sniper mode, we do sniper mode, you make sure that you work with your lower time frame very well. You have to work with your lower time frame very well. Your higher time frame are meant to tell you the direction, and your lower time frame are meant to make sure that you look out for key reversal signals. You understand that in few minutes you're in profit and you go out. Lower time frame is mostly meant for. So now that's identified. Then market reversals happen most times, but it's always at key zones. Understand? It's always at key zones. And price always swing. Price don't move in a straight line manner. And one thing price does is that it goes from other blocks to other blocks, support to resistance. So as okay, now for today's chart, let me just bring it to you now. For today's chart, this has been my analysis. If you've been following my courses back to back, you'll see that I've been talking about all this swing. I trade mostly US 30. Now, I mapped out this level last week that price will reverse to this position, and price did. Price is currently retracing from this position, though it never touched fully. It never touched fully. So that's what it does now. This is another block. Price reached there, but it never entered. Understand? It never entered. So to make it a perfect draw only, I will have to I have to draw it to the previous high of the last day, and we discover that it's entered. So this is what I always do mostly. So now it is a downtrend. It is a downtrend automatically. So this is it. So you can see it happens very much. So this is another important zone. Important zone. Price reverse from here. So these are the zones you look out for. Now for where is price going next? You might be asking yourself, where is price going next if it's reversing downwards? It's very simple. You have to draw first. I have important points to watch. I have important places to watch out for. Price where price will reach. First, I have this level. I have this level here. I have this level here. I have this level, and I also have this level. So I'm expecting that price might reverse in this zone. Price might reverse here or here. So these are the zones I'm looking out for reversal. Um if I'm entering this trade by tomorrow, I'll be taking my profit anywhere here. Now, price is not just going to move straight to this place. I'm expecting price to make a good consolidation in this place. And if it's making consolidation, it will definitely touch this point before it drops. So that is how you look out for market reversal. Look out for the other blocks, you draw it. Now, this is I drew this previously and it's happened, it worked out. Most of these things are things I did previously. I mean, if I go back my chart, you'll see a lot of lines I've been drawing. Looking at, and it's always working perfectly well. It's not so those are the things you always watch out. So if you're watching out for reversals, you look at the other blocks, you look at the mitigation blocks. The mitigation blocks not as accurate as that. You can look at the free value gaps, you can look at you can use the Fibonacci tool, latest swing, and that is what you basically have to do. So that's all for this course, and I hope that you really got something so valuable. So today we never talk much, but I hope you get something. So the first thing we talked about mastering candlestick, and I talk about three methods that I mostly use, which can be helpful to you. 50% level and the rest of the two, you can go back to the video to understand that more. I talk about risk management, reducing your lot sizes to suit the position you're entering if you're really pushed to identifying zones. I talk about and market reversals. So these are the key things that you look out for when trading. You understand? These are the key things you look out for when trading. So if you keep applying these principles, you're always gonna get it right. So stay tuned. I'm going to come again with now on the next course. I'll be talking about AMD. I'll be talking about AMD first accumulation. I'll be talking about free value gaps, and I'll be talking about other blocks. I'm very sure that you really want to hear my thoughts on this. So please stay tuned for the next class. Click your notification button, subscribe to the channel, like, comment your questions. I'll be there to answer. That's for the guys that are buying the recording of the class. It's very important. Then share share the group link to as much as you can. Thank you so much. Have a nice day.